Hi, I'm Ali Patterson. On this episode of Fintech Finance, we're taking a look at compliance and innovation. For this, we speak with Pushfor, Bank of America Merrill Lynch, SCB and RaboBank. Firstly, I went to speak with Mike Williams from Pushfor to hear a little bit about the impact that GDPR is going to have on the industry.
We're going to see a lot of fines because I think the reality is banks are not going to be, well, not all of them are going to be ready by May 2018. It's going to be quite a long journey, and there's a lot of issues they're going to need to resolve in terms of legacy systems and changing the way they operate, and then probably adding to those systems and extending the capability of what they currently have. So it's a journey. So I think there will be a large number of fines. In terms of Brexit, I don't think it really changes anything. It was interesting recently, there was a report where I think it said 1 in 4 organisations had cancelled their preparation when they heard of Brexit, thinking GDPR wouldn't apply to them anymore. But basically, if you hold any data on EU residents, it doesn't matter where your operation is in the world, whether you're a US company, APAC company, European company, GDPR applies to you. So I think again there's probably an education process that needs to take place still for some organisations on what GDPR really means and the true impact it could have on their organisation. But I think it's going to be a hectic few years.
I sent Douglas McKenzie to speak with Matthew Davies to hear a little bit around these new regulations and the positive impact they may have.
A lot of the time, regulation drives a lot of challenges. Banks have to spend a lot of money each year investing to stay current with changing regulations. Corporates have to comply with changing regulations, and some of those pressures filter through one side to the other. But I think there is, as you say, there's a very, very positive opportunity that comes from regulatory change as well. A great example would be PSD2, Payment Services Directive 2. And when you look at what that regulation is doing, it's really opening up the market for more providers to provide banking type services, whilst the account providers are opening up to allow those providers to compete in this space. I think that is both a threat and an opportunity for the existing players in the market. And the positive change from a technology perspective that's being driven out of that is obviously APIs. And when you think about the potential application of APIs, we think there's some really, really interesting possibilities, and will really shift the dynamic between how companies and banks interact with one another. And when you start to combine that with the move towards real-time payment, I think you're going to see some very, very interesting solutions develop from banks and other providers in this space.
Douglas then travelled to Sweden to speak with Rasmus Järborg from SCB to hear a little bit around the opportunities that GDPR represents.
For sure, I think if you look at GDPR, it is a game changer, not just for banks, but for all industries. And for once, this is not a piece of regulation that only hits the financial industry, but it's across the board. And there I would say, if anything, us banks have an advantage. We've lived under similar regulation for years. This is a new piece of regulation. I think we are very good at handling customer data, but it becomes a different paradigm because it's two main things, right? The right to be forgotten. And if you consider that we have multiple systems where your address, for example, is stored, it becomes about knowing all the places that information is stored and being able to wipe it. And secondly, to be able to move your data to another provider, which really, again, isn't something we've had to do. So it needs to be, we need to standardize the data and the metadata around the data and be able to transfer that. But as with any regulation, if you look at GDPR, if you look at some of the other stuff that's coming in, we really try to align it to our own values as a bank. And because we think transparency and fairness to customers and access and control of your own data is something that the customers should have, for us it becomes less of a philosophical issue and more of just a technical sort of conundrum. How do we comply in the best possible way? How do we make this easy to use for the customers? If anything, we see GDPR as sort of a snowplow for some of the data work that needs to be done anyway to become more data-driven, to onboard more data sources onto the lake. We say, if we're going to be compliant, which we have to be, then here are some of the steps we need to take. You know what? Those steps will also help us become better at using data from lots of other purposes. So we see it really, we keep looking for not the regulatory arbitrage, but for the synergies of what the legislation is trying to do and what we want to do anyway as a bank.
Well, so we've gone over some, obviously, the challenges and some of the opportunities that really GDPR and to be honest, regulation as a whole sort of really represents. What can you guys at Pushfor really kind of do to really enable some of these organisations not just remain compliant, but also to really capitalise and really make these opportunities work for them?
Yeah, it's interesting. So if I go back to the whole issue around unstructured content, you know, and let's take, you know, if that represents 80% of the problem in terms of potential hacks and data leakage, then the problem is really goes back to sending content. Now, in some cases, email is fit for purpose, but in other cases, it isn't, because part of GDPR requires you to put in systems that are secure by design. Email isn't. You know, if you take any email scenario, you end up with multiple footprints of content, you know, throughout your organisation or external to the organisation, completely out of control. So the exciting thing, and if you look at what we do at Pushfor, is the key takeaway from Pushfor is push, don't send. So we have a US patent for what we call pushing content. And in a push, all the content stays secure by design on the server. It never leaves the server. So then you think, well, how do you actually allow anybody to view it? And this is the clever thing behind the patent. It effectively projects a view of the content through to any device. You don't need any of the authoring software on the device, and nothing is left on the device after the view. So nothing can be hacked into on the device. So that fixes a lot of the issues around GDPR, because you're preventing a potential hack into the content. You also prevent the issue around human behavior, which is I might just forward it accidentally or maliciously to someone I shouldn't, because you can control the number of views, how long I'm allowed to view it for. If I try and screenshot the content, it kills the content and notifies the author. And if at any point I need to pull back the content, I can. And then on the other side, I have this live link through to the content, and it means I can absolutely monitor what the end user is doing in terms of their consumption of the content. So I know where they viewed the content, so I could geo-ring fence the content to an office or a country. I can absolutely detect, you know, what they're doing in terms of viewing right down to a section level. So you can imagine, you know, if I might be looking at a particular set of product information, and then that, you know, that would be fed back immediately. So I may, you know, then engage with them to help them through understanding the product better. So you get this full control, you get full analytics back from the content consumption. So you address GDPR, and at the same time allow people to access real-time content on their own device. So, you know, bring your own device, which is again a big driver for the banks at the moment. Allowing people to bring their own device means I, as a consumer, can access content wherever it suits me best, on whatever device it suits me best. So I improve the customer engagement, make it easier for me to do business with.
I was interested to hear about some of the uses of big data and any compliance issues around this.
Sure, it's early days yet. I think what is really happening today, a really good customer relationship manager could look at across the data almost manually, right, and put together a piece of advice for a customer saying, I see that you have a yen payment being made in your subsidiary in Brazil. You should swap that out before you have a cash call on your Tokyo treasury or whatever, right? But today, the customer would be impressed and happy with that advice. Tomorrow, it's going to be, why didn't you tell me? You see everything. Why didn't you hedge out my currency exposure before you knew the cash sweep was coming? So I think that is really what you need to do with the data. And we're starting with baby steps. But for example, one of the things we're doing with our SME clients is kind of the Amazon next product to buy. We're all used to this from our personal lives. You buy a book, next time you're into Amazon, it'll tell you, oh, you probably like this book. We're using that same technology and that same algorithm to really see, for an SME company, here's what you have. Other companies your size with your geographical exposure usually have this. Like I say, it's pretty simple, but for the customer, it's actually a value add today using big data. On the private side, I talked about our investment in Tink. Now Tink, of course, on their side, aggregates all your financial information. And so being able to say, you're actually earning a subpar interest rate here, why don't you swap this saving into here? Or your mortgage payment is so many bips above what other people in your area are paying. So that's something we're experimenting with. We're also looking at mortgage churn, which is interesting when a customer swaps out our mortgage for some other bank's mortgage. And we used to not really understand why customers were leaving us, and we looked at that in the data model with only 3 months historical data. And now, experimenting and testing different drivers, we've actually been able to predict with 74% accuracy when a customer will leave us 2 weeks before they know they're going to leave us, right? So it really changes the paradigm on the marketing and being able to do very specific, very tailored marketing where, the customer representative so far will call up and say, are you happy with your mortgage? We may see that you want to move, and we would love to provide you with a mortgage in your new house, and the rest of it, right? But really using that data proactively is what it's all about.
In terms of compliance, do you also have one key message that you think a bank should really take away from what we've just discussed around compliance?
I would just urge them to understand the difference between push, don't send, because it's a quick fix. It's something that they could implement immediately, and it would prevent the risk of a data leak, which effectively is 80% of the risk for them based around the unstructured content. It's something they can do immediately, and it's complementary to the systems that they'll already have in place. So, while you're working out, what to do long term, stop the biggest threat. Plug the leak that is your biggest threat at the moment. So yeah, push, don't send.
Over in the Netherlands, I caught up with Finbar Hage from RaboBank to hear about some of the customer experience issues when it comes to managing big data.
Data is the basis of customer interaction. I think we make a big thing out of data, but basically when you do a face-to-face interview, you're also reading data and acting upon the data. I think in the ideal world, your automation will do the same thing that we are doing right now. You will get a question, you will answer, and the next question will be ideally based on the answer you gave just before that. And you're seeing more and more of that and getting better and better. I think there are a lot of instances, especially in the service field, where this automated question answer is being used all the time. And I think the customer doesn't really notice. I think the opposite. When you ask what time will my flight leave, you can have either the agent looking it up and taking the time, or you can have the computer saying, hey, it leaves at this and this and this. By the way, it's 15 minutes delayed. You get instant reply to your question. In effect, that's ultimately better. If you take it then one step further and the client says, great, it's 15 minutes delayed, where can I get a sandwich? Then you sort of start reaching the limitations of today's customer experience and possibilities of data, but that will exponentially grow, I guess. In the end, making human intervention only there where it adds immediate value, where it goes into the areas, the more classical areas of banking services like complicated advice and complicated situations. So I think it's an integral part, and it can only get better.
So I know OCBC Bank in Singapore, they launched their chatbot, which was based entirely on the customer data, and the results were phenomenal. So where do you kind of draw the line between obviously using that information for a robot and using that information for a human?
It's like the example I gave. I think for a simple question and answer, there's no substituting automation. Computer can do it much faster, much more accurate, much more real time than any human could ever. It's when it gets complicated and there are a lot of variations that there's still a huge challenge. We at RaboBank, we take artificial intelligence and chatbots in a really careful approach. RaboBank has always been one of the most human banks in our market area, and we intend to still be that, or at least make that one of our core competences or perceived competences. And we think that also goes for a chatbot situation. So we are looking for really the human touch in chatbots as well. So we take the following approach. We have started an internal pilot with chatbots. So we use our internal help desk system over the 40, 50,000 people that we employ, they talk to chatbots, and they are now perfecting the way chatbots work in a RaboBank environment.
I was interested to hear about the areas in which these analytics are being applied and the effect this will have when it comes to future data usage.
I think as a bank, of course, we've been privileged to have a lot of information about our customers. What we need to do is become much better at using it, much better at compiling what we call the 360-degree view of the customer. And to do that, as an organization, we need to become more data-driven. That means relying on what the data is telling you and not what your gut feeling is telling you. And to do that, I think we need to, first and foremost, to really set our sights on what we can achieve with data, and we've done that through our vision, but also then to start working on the technical platform. There's a lot of talk about data lakes, but most banks are running electronic data warehouses from the 90s. How do you transfer into this modern technology? And then that is a journey that we're firmly on, and that's gone very well. And I'm happy to say that already now our data lake is up and running. We're running a Hortonworks install of the Hadoop cluster. We have our master data management hub from Informatica spinning, which knows the golden record, golden source for each piece of information. But the job now becomes to start cleaning some of the data in the customer divisions and onboarding it into the lake, which you may say is a data puddle at this point, but the architecture is there. It's now about filling it with data. That's on the data engineering side. Now, on the advanced analytics side, it becomes more of an almost cultural change in having the central advanced analytics team, which we call SAP Analytics, to work closely with the customer insight and CRM teams in the customer-facing divisions to say, look, here's what's possible. Ask us any question, and we will try to help you with that answer. And so it becomes really opening the business's eyes to saying, you don't have to guess anymore. You don't have to infer. You can ask us, and we can go through the reams and reams of data and start putting together multi-factor models and algorithms beyond sort of the ken of what a human can hypothesize. You don't need to hypothesize. The systems will find the pattern in the data for you. And once you realize that, you realize the sky is the limit for what you can do with this data, right? And so we're really firmly on that journey. We appointed a chief data scientist only last week, who's now working closely with the divisions on really getting some of the use cases running.
I think for a financial institution or a bank, one obvious area would be assessing credit risk. That's something you basically want to get right. You think you want to have a company as your client based on the assumptions you make or the assessment you make on the risk this company will bring, and you adjust your pricing accordingly or your acceptance policies. That's something we have a lot of rules for in place historically. But that's something out of data that you can make ultimately more advanced. Looking at patterns, looking at predictions, looking at past behavior, looking at peer behavior. Basically getting a picture of a client before you know the client. That's an area where you see a lot of data initiatives going with us, but also with our competitors. Basically risk assessment as a service. Providing it to ourselves, of course, to get a better portfolio. But in open banking, you could also do that for basically anybody who would be interested in an assessment of a company. When a supplier gets a new client, you want to make sure that there will be a paying client. We could use the data and the experience that we have to basically assist in making that assessment. But also for us, it gives us a better view on the client today and what we expect in the next couple of years in order to adjust our pricing mechanisms.
In terms of where you sort of see the future heading for the financial services industry, what are some of the changes that you see happening soon?
Yeah, I think a lot of the changes will actually be driven by a cultural and behavioural change, by the end consumer, and I think we've seen evidence of that recently. The pace at which we've seen a move towards instant messaging in our personal lives and social media in our personal lives. I think it's fair to say the banks have fallen behind in terms of working out how to address that within their own organisation. And guess what? The people who are coming to work who are used to a new way of communicating in their personal lives, they like that way of communicating and they expect the same ease of access to content and communication within the workplace. So I think there's going to have to be a rapid understanding of what that behavioural shift means in the workplace, and also, how do you put in systems to actually keep up to pace, because it's moving at such a pace. Again, the danger will be for a lot of the traditional banks is, they just will not be able to maintain a pace that's going to be, anywhere near what the consumer is going to expect. Now, I know a lot of the banks are, have business models now where they're working with, third party and new brands that are emerging, and I think they are better positioned because they have less of the legacy to, hold them back. So, maybe, one of the shifts we'll see is actually the brands of the future that we're interacting with are not the brands that we're actually interacting with today.
On the next episode of Fintech Finance, we're going back to look at the world of RegTech.